$75 a barrel. So again, recapping here, the Dow, the S&P, NASDAQ finishing off session lows, but still very much in the red. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you, Charlie. This is Jess Minton in the Bloomberg Interactive Broker Studio. Carol Master is going to join us once again from the Milken Institute in Beverly Hills. But I'm going to give you another quick business flash update here when it comes to after-hours movers and earnings in particular. Looking at Starbucks, that's ticker symbol SBUX, shares down more than 1%. The company did report comparable sales that did beat estimates, particularly in the second quarter. It beat the average analyst estimate, but you are seeing those shares pressured. Also looking at Ford, that's ticker symbol F, that also down after hours by about 1.5%. That's ticker symbol F, and it did say that its first quarter adjusted earnings per share was about 63 cents. It did beat the average analyst estimate of 42 cents. But I hear that Carol is back with us in Beverly Hills at the Milken Institute, so I'm going to throw it back to her. Carol.
All right, Jess, so appreciate it. Yes, indeed, everybody. I am live at the Milken Institute Global Conference. We're on YouTube and, of course, Bloomberg Originals. And I got to say, 1 month ago on a Bloomberg podcast, our next guest noted that aggressive rate hikes from the Fed and the ECB were creating tighter financial conditions and more opportunities for distressed investors. This is from Victor Kosla. He's Chief Investment Officer, founder of Strategic Value Partners, roughly $17 billion in assets under management. Welcome, welcome. So nice to have you here.
Thanks for having me.
I have to say that Chanali Bostic, who you know well here at Bloomberg, we ran into you yesterday, and I think she said you're a distressed investor, and you said something else. You said opportunistic.
Yes, I said I bridle at that description, distressed.
Your website says distressed. No, so tell us about this environment, because we're on a day, Victor, as you know, where once again the markets are rattled. The equity market specifically, I should say. Regional volume plummeting. You saw some volume behind it. How do you kind of look at this scenario, this environment, and what's going on, and does it potentially get worse? First of all, let's start there.
Since the Fed started to hike rates, since the Ukraine war about a year or so ago, Carol, so the markets have been grinding down. And the Fed is still raising rates. The ECB is a year behind the Fed, possibly. Inflation is just peaking out there. So I think to our point of view, as we kind of look forward right now, we think this is just the early innings of kind of a credit cycle. Now, are we going to, is this
a bad credit cycle, a tight credit cycle?
A bad credit cycle.
Yeah.
Right? I think as we look at the world today, we can all have a debate. Is it a soft landing? Is it a recession? We at SVP, we believe it's a recession. But I'll tell you what, put that on the side for a moment. 30 years I've been investing in opportunistic credit. 30 years. I've never seen a cycle where the Fed was the headwind. Every cycle we've had over the last 30 years, you hit a bad cycle, the Fed starts to lower rates.
To ease it.
Yes, to ease. Because the ECB is even more dovish, right? It starts to, and it's lowering, it's increasing rates at the same time.
Right.
So I think to our point of view, these higher rates, these slowing economies, regardless of what happens, soft landing or a recession, they are creating an environment where people are starting to have problems servicing their debt, much higher rates today, and those problems we think just continue to now cascade. Our view, and please, I don't think I'm being overly glum or so on.
Yeah.
I think most people would say, look, the next 5 years, even your classic analyst would say next 5 years, slower economic growth than the last 5.
Yeah.
I
heard people talking about 1%, Chris Elman over at Oyster, 1%.
Yeah, so you get slow economic growth, you get much higher rates, and oh boy, and by the way, all this stuff with, First Republic or Silicon Valley Bank, in the overall scheme of things, it's just a little bit of noise, right?
Yeah.
Right?
Does it get louder, though, with something else? Like office properties?
Office is not just going to get louder, it's going to boom. And you'll hear that sound.
Yeah,
right?
Got that. Even top-tier properties, in your view?
So can I tell you, let's just talk about office.
Right? Yeah.
If you look at office today, New York City, center of it, 35% of all mortgage debt on offices in New York City, 20% vacancies. You want to rent space in office today? Effective rents are net effective rents after TI, after CapEx are 30% lower. You put that into your model, you're talking about a 50% decline in office values. So 50%.
Dramatic.
Right?
That's a boom.
Yeah, and so this won't be some soft noise.
So what does this mean for you guys? What do you do? You've got, from what I understand, Bloomberg did a story about a $1.5 billion fundraise, right, for opportunities, maybe a target of close to $4 billion. Is that the case that you're putting to work?
I can't talk about fundraising. You've got to forgive me.
Okay, that's fair. But tell me, in terms of the specific opportunities that are coming before you that you want to commit capital to.
So like take like a lot of 2022. As this opportunity changed, we slowed down. By the way, Cal, can I tell you something? That people always love to talk about, hey, what a great opportunity. The first 6 months of 2022, our focus wasn't like, what a great opportunity developing. The first half of 22 was, how much trouble are we in? Right?
It was.
Yes. So it's because, we all have portfolios.
Yep.
And you kind of look at them now through all these eyes of the coming issues and the coming downturn in credit, and you make sure that what you have is solid, right? That's the first thing we did as an investor. And then in the second half of 2022, as we were looking around at opportunities, look,
we only have about 20 seconds left.
Okay.
So let me just...
Can I just finish on one thought?
Yes, please.
All right. This is early stage.
Okay.
We invested $1 billion or so in the last 9 months of 2022, and we've invested $1 billion in the first 4 months of 2023.
Wow.
Normally, we would be investing $2 billion in those 4 months, right? So it's started.
So stand by. Victor Costa, thank you so much. Come back. I'd love to continue this.
It's such a pleasure.
This is Bloomberg.
Make sense of the markets with Lisa Abramowitz's daily newsletter. Catch the best on-air moments with her and her co-hosts Tom Keene and Jonathan Farrow from Bloomberg Television's flagship morning show, Bloomberg Surveillance. Sign up at Bloomberg.com/surveillance. And stay tuned because Carol Massar is at the Milken Conference in Beverly Hills and will join us again shortly to speak with Ida Liu, Global Head at Citi Private Bank. This is Bloomberg.
Now, your 3-day weather forecast on Bloomberg 1130.
Few scattered showers around rest of today with clouds and occasional sun. Tonight, any showers then followed by mostly cloudy skies and 45 by morning. Only widely scattered showers on Wednesday, more clouds and sun in the 50s. Still mostly cloudy, maybe 1 or 2 more showers on Thursday, 55 to 60. And it should be nicer for Friday, and especially during the upcoming weekend. This is Gary Best with your 3-day weather forecast here on Bloomberg 1130.
Bloomberg Daybreak. Essential business news from across the globe.
This is Karen Moscow.
And I'm Nathan Hager. Join us tomorrow morning on Bloomberg Daybreak.
We're looking ahead to the Federal Reserve interest rate decision with Laura Rame of SS Investments.
And getting closer to negotiations on the debt ceiling, we'll get the latest from Bloomberg Government's Emily Wilkins.
Bloomberg Daybreak, weekday mornings at 5 on Bloomberg 1130, the Bloomberg Business app, or listen on demand wherever you get your podcasts.
A graduate with 3 degrees from New Jersey Institute of Technology, Robert Cohen chairs NJIT's Board of Trustees. He's also a top executive at medical device maker Stryker Corporation and helps recruit top talent from universities like NJIT.
If you look at where NJIT students are going, go to a career fair. There are lines of companies that want to get into the career fair, and it's because they see those students as practical, innovative. I can tell you for a fact, because we hire many NJIT graduates, These students can contribute right from the get-go. The guy who reports to me, who's in charge of all my implant development, NJIT grad. The guy who reports to me in charge of all my robotics development, NJIT grad. They contribute to development cycle. They contribute to the testing. We have NJIT graduates in manufacturing. We have NJIT graduates in quality assurance. We have NJIT graduates in our computer science. These students are some of our best.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Is your firm growing as fast as it should? Commonwealth Financial Network can help you accelerate your growth by tapping into intellectual capital, targeted marketing strategies, and tailored development programs. Everything you need to grow your practice your way. Welcome to your advisor advantage. Welcome to Commonwealth. To learn more, visit commonwealth.com. Commonwealth Financial Network. Member FINRA SIPC, a registered investment advisor.
No one knows where this market will go. Right now, it feels like a wild ride. But one thing's for certain, there's a way through it. And the experience and guidance of a Merrill advisor can help you get there. Because where there's a bull, there's a way. Find an advisor at ml.com/bullish.
Merrill, a Bank of America company. What would you like the power to do?
Investing involves risk. Merrill Lynch, Pierce, Fenner & Smith Incorporated, registered broker-dealer, registered investment advisor. Member SIPC, a wholly owned subsidiary of Bank of America Corp.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash. It's 4:21 on Wall Street. We do check markets for you all day long here at Bloomberg. I'm watching shares of Advanced Micro Devices after ours just reporting earnings. They're down now by about 1.5%. AMD, the headline from the Bloomberg, sees second quarter revenue in the range of $5 to $5.6 billion. The estimates have been for $5.51 billion after ours. Advanced Micro Devices trading lower now by just about 1.5%. Also out with earnings moments ago, Starbucks. It posted sales that beat estimates as transactions increased, a positive sign for consumer spending. Performance in China also outpaced Wall Street's expectations after ours as we run the GIP function on Starbucks, down now by just about 2.4%. Down day on Wall Street today, red on the screen, regional banks front and center. A lot of anxiety there. Just a day after the rescue of First Republic, shares of PacWest Bancorp down 27.8%. We had shares of Western Alliance Bancorp down by 15.1%. Bottom line, stocks sold off with the S&P down 48, down 1.2%. The Dow today down 367, down 1.1%. Nasdaq down 132, also down by 1.1%. 10-year yield 3.42% with the 2-year 3.98%. Spot gold 2017 the ounce up 1.7%, and West Texas Intermediate crude oil down 5.3%, 71.65 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm Carol Massar. I am live at the Global Institute, Milken Institute Global Conference here in Beverly Hills. And we have a great guest with us, Ida Liu, Global Head of Citi Private Bank. She's a member of the Global Wealth Management Leadership Team there. So good to be here with you again. You were saying it was your 7th year at Milken.
Yes, it is.
I don't know, do you go from year to year, and the pandemic was certainly an interesting time, and I don't know, how do you kind of compare it to last year in terms of some of the conversations, the worries? We're still talking recession. I don't know, give me an idea.
Well, you know, it's interesting because the energy level here is incredibly high. We've had a huge amount of people here at the conference this year. It seems a lot more attendance.
It's like what pandemic finally.
Yeah, exactly.
Finally.
Back to sort of BAU pre-pandemic levels of attendance. And it's really wonderful because we are talking about so many topics that are on everybody's minds. You know, everything from geopolitical risks, how to invest, how to navigate the capital markets, is there going to be a recession, all the way to topics like environment and healthcare and gender equality.
Here.
I love the cross-section and the intersectionality of all the different topics as well. Like, very important.
Well, it is funny too that we're, we're going to talk recession, and I want to get your outlook. The concern again about regional banks, because it felt like things had calmed down yesterday, and then we looked at things like Western Alliance, PacWest today, and again, there seems to be nervousness back in the market. And I do feel like the tone changed a little bit from yesterday here at Milken. How do you see it? How do you factor it in? and also the concerns about commercial real estate, like that's kind of the next leg.
Yeah. Well, look, I think we need to let this situation play out over the next few days. I mean, we're super confident.
Do you think it's just the next few days?
Well, let's see. Let's see. But we're super confident, and that doesn't change our conviction in our banking system, the health of our business. We are one of the most global banks in the world. We're a globally, systemically important bank. We have diverse sources of revenues from different businesses around the world, and a very, very strong balance sheet. So, from our perspective, you know, we're obviously still in very good shape, and looking to make sure that we're helping our clients and advising customers.
It's good to be a big bank right now. I say that with, you know, all respect. When you look around the world, though, U.S. versus, let's say, outside the United States, and I hate to just do those big buckets, Europe, Asia, tell us what you're seeing.
Well, you know, it's interesting because when you look at the emerging markets, they're trading at about a 40% discount to the U.S. And you think about where the U.S. has come over the last decade, it's been a bull market, as you know, right?
Absolutely.
And so the question becomes, how do you achieve the growth in the future? Is it going to be